Interest rates, insurance, all of the hot topics that buyers are concerned about, especially being here in southeastern Brazoria County. Today, I have the wonderful opportunity of joining two of my wonderful friends. One is in lending and one is in insurance. Will you guys introduce yourself, please?
Sure, go ahead.
I'm Charles Smith. I'm the Executive Vice President at Hagan Risk Partners, and I would say that I've spent about 15 years in real estate, a ton of investing, so love commercial properties, love residential properties.
Awesome. Steve Thompson, Gateway Mortgage. I'm a Senior Vice President over the West Region. 20 plus years of doing this.
Yeah.
And
Kind of a baby in mortgage.
Still learning, I will say that every day, still learning, but I really, born and raised here in Brazoria County and just love our area and just have been doing lending most of my adult career and just have a big passion for it.
And when he says that, Steve was actually our first lender when we bought our house. So
I remember the day you walked in.
Yeah, well, I hope it was
And
memorable.
mine as well.
I hope it was memorable. So it was really, really good. So guys, a few weeks ago, as a realtor, I had a wonderful opportunity to hear kind of your, what we will call TED Talk about insurance and interest rates. And it captivated me because there was a lot of information on there or in your conversation that was just so pertinent to what we do. And I think there's a lot of misunderstanding when anybody says interest rates specifically. We're waiting for that magical number to fall. Steve, will you kind of open us up with where you think interest rates are going to go?
You ready for your crystal ball?
Oh yeah.
Just pull it out of your pocket. We want to see it start. Yeah.
So 5 to 10 times a week, I get calls from realtors, loan officers, break out your crystal ball. Where are we going on these rates?
Yeah.
And right now it's really fuzzy. So
Fuzzy.
It's kind of been hit and miss over the last couple of years. And so really the new normal is 6%. There's how many of us can say our grandparents or parents or friends, somebody in the 80s, maybe the late 70s into the 90s had 14 to 21% rate.
It's insane.
And they were still buying, right? Now, granted, the price point of a home is a lot cheaper, but you're still paying interest on it. So the normal rate now is going to be a whole lot closer to the 6. I'm going to give you my personal prediction, but the key word to it this year is going to be stability.
Okay.
Meaning that we don't have those high spikes. Now, remember even 2 years ago when we had to threaten everybody, you better buy now because you don't know what it's going to be tomorrow or the next day or the next day. The rates could go up a quarter point overnight. Go up half a point in 2 days. So I'm going to give you my prediction. Now, this is, again, just my prediction.
Yeah.
I'm going to write this down.
I know.
Don't hold me to it. So I really want to talk a little bit about the Fed Reserve, what that's going to do here a little bit later. And that does play a part of this. But really, my prediction is probably about 5.5 by the end of the year. Okay. And that's probably best case scenario. But you ask most experts, that 5 to 6 handle is a perfect, spot to be in.
Yeah. Okay. I know that was to me, it was a relief, just because people are constantly asking, especially first-time home buyers, they're just waiting to go back down to that 3. Ours, I think, was 3.75. And it's not going to happen. And the word that you said that captivated me was stability. And right now, it's almost a comfort to hear that rate is a stable. It's a stable number. The people that are buying, we've got anywhere from 20 to 40 something year olds. Those are the ones that are really starting to buy the houses and the homes. And for them to hear, the big threats of the drop in 2008, where our parents were buying houses and things like that, there was just so volatile. And to have some comfort and relief to hear that things are going to start stabilizing and it's going to be, a good time to buy. Okay. So just very, very briefly talked about interest rates. You did bring up the word Fed. Do you want to talk about them now, or do you want to wait until later?
Sure. No, it's kind of a hot topic.
Yeah.
And there's a lot of misinformation out there about what the Federal Reserve really does. And I always say it that no matter what your political affiliation is, that Jerome Powell does not care. He is in it to win it in his eyes. And there's a lot of talk, especially online, about how, who's going to replace Jerome Powell. And his term is actually over for chair coming up in a couple months in May.
Yes, I remember saying that.
Yeah. However, he's still going to be on the board of governors until 2028. He has an option to do that. So I don't believe that his beliefs are going to change much. But contrary to belief, Fed Reserve doesn't set rates, right? They have a policy that's that drives it. The bonds are actually, the bond market actually is what sets rate. But they can actually kind of show, based off of inflation information, of what they believe that we need to stay at for an interest rate. There are 8 meetings every year, or at least there are for 2026.
And when we had our meeting, they had just had...
Literally just had it.
Yeah.
And we all know the result. It was flat. They're
Nothing.
they're talking about one more cut this year. Okay. So we don't know, quarter, half, or more, but just one more cut. And actually, they're already projecting for 2027 now. Oh. And they're saying by the beginning of third quarter of 2027, a quarter point higher. So that already kind of tells you that we are staying right around that 5.5 handle, I believe, is what's going to hold.
Yeah. Whenever you had brought that up, I know that my husband talks constantly about that because we're investing. And so whenever I heard you mention that, I was like, oh, this is something that's important. Insurance. That's another big deal. I know whenever I give my buyers kind of an estimate of what they're looking at for their monthly payment, that's the big number, interest, and what's my insurance going to be. Charles, can you please bring some light into the hated word and why insurance is important?
It is so hated.
It is. People
Not as much as interest rates.
No, but people, yeah, okay, for example, someone that looks at a not flood zone, I don't need insurance. I don't need to think about that. I don't need to take it into consideration. And I tell them I would be, remiss if I told you not to get insurance when you live down here where we live.
Absolutely.
Because you have windstorm, you have flood insurance, even if you're not in that zone. But can you shed some light on that, please?
Yeah, you remember the time, Steve, when it was just literally you'd apply some just general formula and insurance was almost an afterthought in the home buying process, right? It was a small fee. We're going to tack it on. There was no worries. And now it's a little bit different. Is what we've seen over the last 3 years are double-digit increases, 11%, 19%, and 21%. So now all of a sudden, insurance is a big part of the game, right? Like
we have to know in the beginning. For a mortgage, we want to know right off the bat now.
So a lot of times it's not just a general number. We're actually quoting the home, right?
Right.
So yeah, insurance is a big deal now. I would also say, just like mortgage, I would say the key word is stability. So is what we're seeing is the market is starting to what we call soften. And what that means essentially is we're going to start to see rates flatten a little bit. We're already feeling that here. We've even seen some decreases, and I'm not talking major decreases. But the good news is I think we're coming out of that high increase market. And you have to keep in mind, like, we are the second largest homeowners market in the United States, right? And when you take and you look at what has happened in Texas over the last few years, you're talking.
It was literally PTSD. He's like, in the last 5 years, we've gone through.
Yeah, I mean, when you think over the last 20, it's just under 200 billion, and you think 150 to 175 of that is just in the last 5 years. It's pretty wild. So obviously, we forget sometimes that, I've heard words like insurance is a scam. I've heard insurance follows inflation, and neither of which are true. You're talking companies that have to run a P&L just like you and I do in business every day. And when they get to the bottom line, they got to be profitable or they don't have a business. So as all these losses come, right, they're adjusting the rates to absorb that loss into their P&L and be profitable, right? As we would all do to keep a business going. Unfortunately, that's resulted in some carriers closing, right? We know some of that. And we've also seen carriers do what we call pull back out of the market and pull back specifically out of Texas as a result. But fortunately, I think we're on the other end of a lot of that. Things have stabilized a bit. And so I'm looking forward to stabilized market right now.
Yeah. And that's actually the next question, stability and confidence. So how does that predictability in rates, both lending side and interest rates, and underwriting on the insurance side, how does that, or how have you seen moving forward, how does that change buyer confidence, either to lean towards closing a deal or lean towards maybe we need to get a smaller house, less note? How does that change or play into that?
So back to the same key word, the stability. So This year is going to be a little bit different. It's going to be the fear mode to decision mode is kind of what I've been giving it the moniker of it. Meaning that now we can set our budget. Before, there's a lot of first-time home buyers that weren't able to purchase because interest had taken them into the next category of a payment and they just couldn't afford it.
Yeah.
Well, now we can sit down and we can budget. So now we can figure out exactly what you can afford and take you out of that fear mode into that decision mode. There's a lot of people that lost out on equity or the potential. So what do you think the average appreciation in Brazoria County is? You would know.
What is it, 30, or no, is it 30%?
No. So on average, annually,
But
annual,
we talked,
about 5%.
Yes, 5.
Yeah.
I was like, wait a minute, no, I remember this one.
Yeah. So about 5%. Could be a little bit more, actually.
4.67.
Oh, here we go.
Yeah,
That's
that guy.
pie number.
It's that guy.
As soon as you started saying that, immediately in my head, I was like, he's going into pie mode.
Oh, yeah. He's that guy. So,
He's that guy.
but just easy math. So let's talk about interest versus your equity. So a $300,000 home, right? 5%, it's roughly $15,000 of potential equity per year. So 2 years, 30 grand.
Yeah.
So if you go back and actually look at interest rate, you take a 6% versus a 5.5%. What is that? The difference is $109 a month. A little over $2,600 a year. So you see where I'm going.
2 date nights, yeah.
Yeah, so $2,600 of additional cost versus a potential of $30,000 in equity. And I get it, there's additional expenses. Insurance can go up because more appreciation. Taxes can go up, can eat into that 30 grand, but still, they're not even close.
Yeah.
So this is gonna be the year that you can actually budget and start gaining that equity. So.
And I think for realtors, the thing to keep in mind is what we saw. There were people in the market that were buying at 3%, that were turning around 4 years later, selling their home. We keep our homes and our mortgages on average 4.5 years. And then all of a sudden they couldn't buy what they once could buy, right? If you're a first-time home buyer, you're coming into the market, you're understanding in this market what you can buy, and there's not that shock factor that people are dealing with. And that's people like myself, going from a 3% interest rate to a 6 or 7 or even 8 at some of the peaks, when we saw high U.S. 10-year Treasury rates, I'm like, wow, my buying power just went down quite a bit. And then you tack on insurance on top of that.
There's a lot of people that are sitting in it waiting, is it going to go back to 8? Or the majority of us are going,
is it going to drop down?
Where's my 2s? Where's my 3s?
Yeah.
We got to think, most of our average buyers right now, let's say they're in the age of 22 to 27. Those are the ones really coming into the market. Well, think about it for the last 5 years. What have you seen on TV? What interest rates have you seen advertised? What dirt cheap?
I mean, you've seen 2% interest rates.
Yeah.
And like a lot of these, I'm not throwing shade, but a lot of these new construction home builders, they're throwing out, we can get you in as low as, 4.2 something. And trying to explain that they're always going to have it on the front end, but somewhere eventually you're going to find that in the back, like having to pay for all of those fees that they don't talk about at the beginning.
Absolutely.
And I'm not throwing shade
Sure.
for, new construction. It's just very transparent. That's the whole point of what this is. You brought something up in the talk that we had last time, where you're seeing less and less 15-year mortgages, and people are, especially first-time home buyers, they see what they're renting for. Can I keep that same payment? Equity means nothing. Can you shine some light on that and just talk about just the importance from the lending side, just the value?
Sure,
and,
sure.
wanting to try to pay that off?
Well, really, y'all been buying homes for a while now. So I don't know about you, but my
I know
uncle,
one person, and he's in my family, my brother. My brother, who's 34, has a 15-year mortgage.
Yeah.
And it was because my dad told him, this is the best thing that you can do. Michael, whenever we found out about it, Michael was like, I wish we could swallow a 15-year mortgage.
Sure.
But that's how we're thinking, because our parents before us are telling us that's the way to go. That's not the norm. So
it's
can you-
not.
talk about
Yeah.
that.
So in 2020, I probably did the most in my whole career of 15-year mortgages, because I could take you from a 7% rate down to a 2%. Your payment would still be cheaper, and I could shave off, 5, 10, 15 years, depending on where you're at the beginning. So that's really been the only big time in history that we've done them. But what we've seen now is people treat a mortgage almost as rent.
You do. That's the first question they ask.
Yeah.
First time home buyers, it's, well, I'm paying this in my rent. And it's like,
Yeah.
it's so much more than that. But
Well, it's in same consideration. They're not worried. Like, I don't know about y'all. Like you said, your parents, your grandparents. That's what I was told. Pay your mortgage off as fast as you possibly can. Double up your payments, biweekly payments, whatever you need to do to get rid of that debt. That's not a thing as much in the younger generation. Again, I'm going to pay $2,500 a month to rent this home, or I can purchase this home for $2,500, $2,400, $2,300, whatever.
yeah.
Why not? It's not going to cost me more. I can break out of it, even if I don't gain any equity, which you should theoretically. If they don't, I still treat it as rent,
Yeah.
and then I'll move on to the next home. So.
I just want to I guess for me, I want to understand why that's becoming the norm and why that's not something that they would want to pay off. I mean, that's a big debt, but that was just, it was, when you said that, it was like, oh, I can relate to that because I've just worked with 2 buyers recently, and that was their very first question. This is what I'm paying in rent. Get me into a house that can get me the same payment. And it was very strange to me. So
I think also the thing we forget is there's also this mature market where people are having more of an investor mindset.
Sure.
And they're going, hey, my mortgage is building equity. I'll go do something else with my money.
Sure.
And I think that's part of it as well.
5% appreciation or so that I'm naturally gaining on it. So why not take that equity out and reinvest it into more property?
And go make 8 to 12% in the
That's
market
right.
or something. So
We do see a lot of that too. Not as much in the younger generation. They treat it more as rent. But we've really changed over the last, 3 to 5 years. I feel like it's really been the difference in that mindset versus paying it off. Hardly anybody comes in my office anymore and says, my goal is to pay this mortgage off.
yeah,
My goal is to
and
have
I
the
remember you
cheapest,
saying that too.
yeah, the cheapest payment I can because insurance is a scam.
Yeah, no, and it's not.
It's not.
It's not. Okay, something that was surprising that you had mentioned again was AI. So AI is a hot topic, especially for me. I know as a realtor, I use it so much. I think I call her Chatina. She's my friend. She helps me a lot. But can you kind of talk about how it's changing the face of mortgage, how it's maybe changing the face of insurance, if it is at all? I know people are starting to try to understand what is AI actually going to do with our industries. I mean, really, truth be told, could our industries be taken over by AI? Could, chat, have somebody, pre-qualified and tell them what their insurance is going to be and figure out what the lockbox code is to get into a house? I mean, honestly, that's the reality that we're looking at. So I would just kind of like to hear and you had talked about it very briefly in the luncheon. So,
Well, ironically, a couple days after our last talk, I had a loan officer call me and he was telling me about AI, and he's really big into it. I'm still just learning and getting into it.
when I said the word real, both of these gentlemen pulled this out right here. We're not talking about a fishing line, but okay, continue.
Yeah. So, but he called me and Aaron asked me, he said, have you invested quite a bit into your AI? Does it know a lot about you? She said, yes. I've really gone through all the questions. I feel like it knows me. He goes, all right. He said, scary question. Type in, given my current job role, how many years before AI makes it obsolete?
Why would you do that? But okay.
Don't do it.
Yeah, don't do it.
it's like asking, what is this bump on my skin?
Yeah, I know. Asking
Yes.
Google, what is this on my skin, or taking a picture?
You're dying.
Yeah, no,
You're dying.
no.
But it really is morphing, and I'll go first on the mortgage side of it. We're seeing it so much. In fact, I just signed a contract with a group to put on a class for my loan officers. It's a 90-minute class every once a month that we're really investing into Gronk, Gemini. So anyway, the biggest thing that we're seeing is we have a lot of processes. You remember when you get your mortgage, right? You got to meet with us in the beginning. We have a little bit of software you can use and utilize, trying to speed things up. Well, AI is really taking that over, that initial contact. In fact, it makes it look like you're actually talking to me.
Yeah, no.
And I have no clue, right? Second is just the processing part of it.
Yeah.
Gather all your documents, right?
Yeah, most of that's done through apps now.
It is. So we've always had a software that we can use that you remember using, that you run all your information through it, and it gives us a recommendation of approve or refer. Approve means good, refer means we need to do a little work to get you figured out. But now you can take all of that initial information and run it through some of these different AI softwares, and it'll actually give you almost guaranteed certainty that you're approvable. And it'll narrow it down to the exact penny of what you can spend, where you can go.
Yeah,
the
and
areas
you brought that up. You were talking about that.
It's crazy.
Yeah.
Appraisals. There's another one that.
I hate that word.
I know.
hate
It
that
is a dirty word, but
I hate that word.
it's really taken over some of that too. One other thing that we're really seeing it for is, this doesn't really pertain to realtors as much, but a refi campaign. So I was really impressed the other day when our company is using this other company called Ardley that can go through our current line of loans. We currently service a little over 7,000 loans at Gateway. Yeah,
Wow.
about $17 billion worth of loans. It can actually comb through that and figure out what you could use. Mega, what kind of refi could fit your needs?
Oh, wow.
Based off of your current credit usage, your term, where it could save money, and then send you out several different options. And it looks like it's coming directly from me. It looks like it's very tailored directly from me, voices and everything.
Oh, no.
It's really cool. So.
Yeah, I mean, that's cool. But I mean, I do appreciate like the interaction and the contact, because if a question does come up, yes, I can throw it in chat. But I think more of I really appreciate the in person.
Yeah, thank you. Thank you.
Like,
Me too. I'm still old school again.
Yeah, no, and a lot of people. I mean, I will say it's kind of split right now. Like I said, I just closed some young first-time home buyers, and they were very much, no, we want to meet with you. No, we want to sign, papers. No, we don't want to do anything online. It may have been because I scared them and I told them, do not take an email that you get unless you screenshot it and send it to me. But I just wanted to understand and reassure there's still a human aspect.
You're going to laugh at this. Up until 2020, that's really with COVID, right? I was forced. But prior to that, my whole career, if you were a buyer, you called me. I could take a phone application, but typically I like to meet with you, right? Bring your documents in. Let's look it over. You remember some of this process?
Oh, 100%.
Yes.
I was very intimidated.
Yeah. Well, it's
very
to help
intimidated.
you guys, kind of walk through the process.
No, Michael loved you. Still loved you.
Yeah. Well, then after you got your contract, I'd bring you in, and we have what's called disclosures. If you remember that, it's 50 papers. You go over everything. Well, up until that point, I met with everybody and hand signed it. In fact, it was hilarious because my underwriters, my processors all knew it was me because I highlighted through it and I wrote all these notes and I made sure that you left knowing exactly what you were doing. And then even at your clear to close, I was at your closing with you too, right? Now, after 2020, in fact, during the COVID year, it was so crazy that through apps, through online, there's times I didn't even meet customers. Didn't even physically speak to them on the phone because they wanted to do everything online. So it's
and I know it's convenience. It's all about convenience. And I mean, we're actually getting ready to launch a concierge service, but it's all about convenience, and I get that. But I do appreciate hands-on and in person. Did you want to touch on AI with insurance? Is that going to change anything?
Artificial intelligence.
Is that what that is?
Yeah.
Stop.
No, and I think it's very similar in insurance. I was talking to an executive that's been in the business 30, 40 years. The thing about insurance is they're a little bit slower to adapt, but that doesn't change the fact that AI is coming in a big way and the options are there. I literally had a demo the other day on personal lines insurance where I talked with somebody almost all the way through the process. And then once it validates you as an individual, then it flips it to our sales team and then they can close the deal. So very similar in mortgage. It's walking all the way through the application process. What do you need? It's validating everything. It's taking all your personal information, and you almost cannot tell you're talking to AI.
Oh, wow.
And it says, hold on, let me get you to a licensed agent.
Right.
And it flips you right at the last. So
Wow.
it's impressive what's going on. I think we're going to see a huge shift in personal lines to AI. I think we're going to not see that so much on the commercial side.
Okay. Well, okay. So you're talking personal, like on the personal side. Here, and I've mentioned it before, we're all from here, Brazoria County. We've gone through some heavy things as far as natural disasters. Can you, Charles, talk a little bit about property-specific insurance and why that's important and why that's pertinent information, why people need to take that in consideration?
Yeah, I think when you look at Texas, it's interesting because the way that insurance companies look at it is there's different tiers. And if you could imagine these bands that kind of go parallel to the coast, and you got tier 1 and tier 2 and tier 3 as you go more and more inland. And the thing interesting about where we live is I feel like we can get just
fit
about
all of
anything. We got it all. We got hurricanes.
We have
got floods.
snowstorms. We have
Apparently we're
hailstorms.
not, we can get tornadoes. We can get it all, right?
Yeah.
So when you think about that, the risk
So
goes
true.
up, right? Therefore, you're required to have the homeowners. You're required to have the wind. And in a lot of cases, you're required to have the flood. And we saw the whole flood map jurisdiction change, 5 years ago?
Yeah.
And I mean, there are streets that I know have never seen water in the streets that are now AE and requiring flood. Now, that means it's going to be relatively cheap for the flood insurance, but we're seeing insurance as a huge requirement across the flood. They say flood has doubled over the last 5 years in policies. So
I can tell you, even personally in my home, I never had to worry about water till a few years back. And I'm the guy out there taking plastic, cutting it, pulling rock out of the driveway, laying it against my house to keep the waves of water from lapping into my house.
Yeah.
it's wild. So yeah, with all that said, I think is what you're seeing is because of the disasters, you see state-funded programs like Texas Windstorm, you see Texas Fair Plan. And I think those are things we got to keep our eye on. Texas Windstorm has been essentially insolvent for a while, so they have not balanced their budget well. And fortunately, due to some of the politicians wanting, they ride on that. They say, hey, we're going to keep TWIA rates where they are. And really, TWIA rates should come up. I mean, my hopes personally, and I know people probably hate to hear this, is we hope that the TWIA rates come back up. And is what that does is it invites the private market back into the windstorm space. But is what you're seeing, 10 years ago, we'd have a combined policy where you had your home and wind on one policy. Now you're seeing carriers come and quote X wind, and that essentially means we won't quote the wind. We don't want that risk. So they're just quoting the hazard, and then we're having to go out to TWIA to get the wind risk covered.
I can remember that when I got my little envelope in the mail and it said, we are not going to renew you.
We're not going to insure you. Yeah.
We're just not going to renew you. Go find another carrier.
Well,
Another insurance.
and so is the thing that I would encourage realtors to pay close attention to is preparation of homes, right? Is what we're starting to see now is more and more what we call memos in home inspection. So Megan, you call me, I quote your insurance, and is what happens after that, the carriers go out and do an inspection on your home. And you got limbs hanging on your roof and things like that.
Yeah, I'm so glad you brought that up. Yeah, I remember you specifically talking about that, and those are some of the simple things, but yeah, go ahead.
And think about just the common things. It's debris laying everywhere.
Right.
It's limbs on roofs. It's things that, flying objects, all the things that you think about in wind. What's going to happen if a tree's laying up against a roof? Wind's blowing, it's tearing the roof up, right? So they've got more conscious about those things because those are the things that are driving more claims and driving premiums up, right?
Yeah.
So a lot of times we'll get a memo and it says, hey, this house needs XYZ. We call the insured and we say, hey, listen, we need you to address these things over the next 30 to 60 days. If they don't, you get that beautiful note in the mail that says non-renewed.
Not renewal, yeah.
And those things are getting more and more strict. So when somebody asks me, are carriers pulling back? I would say some carriers are definitely pulling back, but is what you're seeing is they're getting more strict, right? So they can continue to cover those items.
Okay. So since we're talking about now kind of realtor specific, as we start talking to buyers, as we try to answer as many questions as we can, which obviously I've been taught by Kim, make sure you stay in your lane, which is why we go to the experts. What are some things that I could be addressing early on with my clients to be thinking about moving forward in loans and insurance and where to buy, what not to look at, not really what not to look at, but just kind of those processes from both sides. What are some things that I can educate my buyers on? Still staying in my lane, but just, kind of giving them a heads up of what to look forward to whenever we do have to come to you guys and get those quotes.
Well, to me, it's amazing that on a mortgage, everybody thinks there's one factor. What's my interest rate? I mean, that's what everybody wants to know, and you'll be amazed how many people call. Hey, this is Steve. Hey, this is Joe Bob. Megan told me to call. Well, cool. Well, what can how can I help you today? Well, what would my interest rate be? I mean, just right off. So I love that you say stay in your lane, because I try to do the same on the real estate side too. But there's a lot of factors. There's insurance, there's interest rate, there's taxes, there's price point. One of the biggest that I would say, and I'm sure he's going to touch on it, is flood insurance. Like you said, that how it's really doubled over the last few years. Well, there's a lot of places that are flood insurance. A lot of people want to assume a past flood insurance policy, and I have personally done that before, and it did not work out for me. It ended up price going up, and it almost put me out of my original budget that I wanted to be in. So, in short, as a realtor, educate them to get several quotes from lenders. I think that's a great thing to do. But
can you touch on real quick the difference between a soft pull and a hard pull? Because that's one thing that they keep asking over and over. It's like, is it going to mess up my credit? Is it low? And it's like, you need to ask the question.
Sure. So there is a vast difference. There's 3 credit bureaus: Equifax, Experian, TransUnion. So you can do a soft pull and pull 1 bureau, and it is not going to get you credit. It's kind of the same as probably what insurance does. Imagine
soft pull. Yep.
And you did mention that you're now going. Lenders used to go to 3. Now you're narrowing down to 2.
We are. So the soft pull, everybody remembers what we call trigger leads, if you remember that. So what would happen is, Megan, you would call me. I'd pull your credit, and then you would get 172 phone calls within an hour from all these different lenders. And those bureaus were actually selling those leads.
Okay.
So law got passed to restrict it. It's coming into effect, so that's really going down. But what that caused the market to do is do what is a soft pull. The good news about a soft pull is I can look at one of your scores and kind of give you a gauge at a blink, just a glimpse of what your credit's going to kind of be, and kind of get you pre-approved. Bad news is that's 1 bureau. You still have 2 others, and we take the average, right? Not your high score, not your low score, but the one in the middle currently. But a hard pull is going to go against your credit, meaning that it's going to show an inquiry. It's not that big of a deal. You're actually allowed to shop that and go to multiple lenders during that 30-day period, and you won't really see an effect from it.
Okay.
But what we have done is allow the soft pull, but I can't take you all the way to underwriting. So what would end up happening is I'll pull your soft credit. We get you pre-approved. You start looking for a home. Then I still have to go back in and pull hard credit. So what we've always done is called a tri-merge. I mean, we do all 3. Well, they kind of have a monopoly on the cost right now. If you remember.
Yeah, I remember you talking about that. I think you said now the average is like what, $90?
Yeah, it's really close to $100, and it used to be
30.
Yeah, it was $20 back in the day for 2 people. It was dirt cheap forever, right?
So everybody's getting expensive. Not only interest, not only insurance. Everybody's getting expensive.
That's right. And that's what I said. That's one of the
and
factors.
And that's a cost to the lender.
It is. It's a cost, and we pass that cost on to the borrower. So in the end, the borrowers are paying the accelerated cost. Doesn't matter per lender. It's all roughly about the same.
Yeah.
So what they're going to do is go to a buy merge, meaning they're going to cut one of the bureaus out.
I hope it's the high one. No, I'm just kidding.
I know. Well, we've actually started this, I don't know, last year, mid-year or so, and we're doing it to a degree. It has not become the norm yet. We're still doing the tri-merge, and I don't know if it'll ever become the norm, but it is coming to help try to do a cost savings. So.
Okay. And then did you want to add anything to that? Or?
Yeah, and the funny thing is we think of insurance just like we think about mortgages, just like we get the phone calls and mortgage that says, what's our interest rate? What's our interest rate?
Yeah.
It's what's my homeowner's rate?
Yeah, what's my rate?
And guys, we try to really do a good job as an agency is educating people. The things that we don't understand is there's so many different options inside of a homeowner's package.
Yeah.
Right? It's deductibles, right? Like,
oh, can you talk about that, please? Like just helping people understand what is it? 1%, 3%, 5%? Like what is it that you're looking at and why are you asking those questions? I try to educate them, just kind of asking them and giving them basic questions to ask an insurance agent because these first-time home buyers, they've been in an apartment, they've been living with their parents, they don't know what to ask. They're just like, what's my rate? Oh, well, that's too high, I can't afford that. Okay, we move on. No, but I want you to understand what you're covering. Even though you're getting a really good low insurance rate, what is it actually covering?
Well, and here's the problem with what you're asking is you go and you do your mortgage and you put your money down and you're totally broke. And then is what you're doing is you're grabbing the highest deductible possible. So that deductible is a percent of your overall coverage of your home that you're going to have to come out of pocket. So you got a 5% on $300,000, you got to come out of pocket $15,000, right? When something happens, if it's a $25,000 deal and you don't have $15,000. So I think the thing that I would encourage people, as you pick your deductible, it should reflect your cash flow that you have in the bank, right? So you pay a little bit more for a lower deductible, but should something happen and you not have that money?
You have the money, that's right.
Yeah, that you have the money. And then I think you got to start looking, and it's no different, like I said, than in mortgage when people are calling us and going, hey, how much for my homeowners? How much for my homeowners? Well, if you're comparing it to something, what are you comparing it to?
Right.
What coverage do you actually have? Did somebody actually quote you appropriately? We always like to joke in auto is people will call and say, hey, how much for auto insurance? Well, that last number is what pays out to the person should you hit their car, and they'll have $30,000 worth of coverage. Well, how many $30,000 cars are running around these days? Most of them are $100,000 for a truck these days, $80,000.
Yeah.
So you hit somebody, I hope you have the other 50 to compensate that 30.
Right.
So I think is what I want first-time home buyers to hear. And quite frankly, most people is don't treat insurance like a commodity. Treat insurance
a priority,
like something that's truly covering your risk. So the question is, what is your risk? What type of cash flow do you have? And are you appropriately covering your risk based on your cash flow circumstances?
That's
right?
really good.
And I see
Make an intelligent decision.
I see it in mortgage all the time. People will call me and say, hey, Steve, do you still have a copy of my insurance? Sure. Let me look in the computer. And I said, well, who is your provider? Oh, I don't know. Whoever is the cheapest one.
That's right.
And that's what they look for, is just that cheaper one. And now they're going to have to go back and start reading the policy to see what was actually covered and what's not covered.
Yeah.
So I advise all the time, well, did you talk to them? Did you find out what you're going to get covered? What are your exact deductibles? What does that really mean? Because like I said, I've seen my own policies. There's tons of options in there. And a good agent's going to go over that with you.
Absolutely. And we go line by line. And so I would say if you're talking to an agent that is willing to share that information and go line by line, don't glaze over. Pay attention. It's important.
No,
It's important.
yeah.
Sure.
Are you seeing a lot more, bundle? Like, are people bundling a lot more with insurance agencies? And is that something that's a benefit? Is it?
And that depends. So, we're an independent broker. So, what that means is we have access and we have relationships with a ton of A-rated companies. And so, I would say that differs between carriers, right? Like, you take a Progressive carrier, they encourage us to bundle, and because they encourage us to bundle, they provide a discount to the consumer. So it's always good to look at, and some carriers don't, right? But that doesn't mean that carrier independently covering home and you covering auto somewhere else isn't the best price, right? So our goal is to always look at all those options. If we bundle it, if we split it, like what happens to the cost of that insurance in that specific circumstance? And I think going back to your original question, what do people need to hear and what can I tell realtors is I think don't forget about insurance. Like if you're looking at a home and you see somebody highly interested in that home, I would call the insurance agent and I would get a quote on that home.
Yeah.
Because things vary so much now. Let's say years ago, nobody cared about a roof. If the roof was within its age and they drove by and it looked like it was in good condition, nobody worried. Now we got years on roofs, and if a roof is over 15 years old, even though that roof is still good, there's a premium associated with that. So I think the minute you see a high level of interest in a home, don't be passive about the insurance. Go get an actual quote on that so you can give that to your mortgage guy and say, hey, let's add all this up. Let's see a true expense on that so you know what you have coming to you.
Yeah, so that's actually something that, and I just want confirmation. When I have my first time home buyers during our option period is when I tell them, these are my top 3 or 4 insurance providers. I would tell them the property address, have a conversation with them. These are the questions you need to ask, but you need to do that during your option in case it's not going to work out, But do you think that that's good practice, or how can I modify that?
No, I think that's great because it could affect their budget or the dirty word affordability or qualifying. An insurance rate that we're expecting it to be, $150 a month. unfortunately it has some of those factors, and it's $380 a month. Well, one, it makes your payment a whole lot higher. And then two is, can they still afford the mortgage? We have to look at debt to income ratios. So we want to know all that information in the beginning too, as fast as we can. Like I said, we used to just plug in a number. I was really good at guessing. I'm not even close anymore. I give up on that. So.
Well, and I specifically recall a client that went all the way through the buying process, we got all the way close to the end, and we got a flood quote, and it was a $5,000 flood policy, right, out on the private market. So, and there was no other options.
Yep.
They ended up buying that home, but could you imagine the mental strain that comes with knowing that? But if they would have knew that months ago, they could have made some intelligent decisions and say, is this the house for me? Is it not?
And this is just, I mean, this is personally for me, just clarifying, because I've heard several different stories. Let's say property A is in a flood zone. It flooded during Harvey, and then it flooded right after the Memorial Storm, like in 2021. What is the likelihood of that property being insured again? If a client really likes it, is the premium going to be higher? Is that going to be more of a risk? Should we look down the road?
I don't know that you should look down the road. I think I think there's a ton of homes that have flooded twice that people are moving into, right? And is the flood insurance higher? Most definitely. I think you see specific communities like
Audubon.
Well, and you see some that are being forced to raise because nobody will insure it, right?
Yeah.
They're raising homes right and left. So I think the message is always take each home and evaluate that home for what it is. Don't make assumptions. If you're interested in the home, walk the process. Call the insurance company, get the actual number. They can give you the actual numbers of what it's going to cost to insure that home. And then the mortgage, Steve's team can plug it in and give you a total expense. And if that makes sense for you, that makes sense for you, right?
Yeah.
Those are the decisions. And that's how people need to make decisions, right?
And I would say it's probably minutes. How long does it take you to, on average, to quote home, wind, flood, on average?
I mean, we could give you a budgetary within an hour. If we're wanting actual, we're 24 hours. If we're going to go to each carrier that we have available. So we try to say 24 hours, but that's worst case, right?
Sure.
Like if we can sit on it for 24 hours, now we're going to have it to the penny what your best quote is going to be. If we need something very quick, we can get you a budgetary quote in an hour, and we're going to be pretty close, right?
The same with the mortgage. So you imagine you can invest 2 hours initially in the beginning, especially in your option period,
Right.
and find out exactly what the budget is, what they can afford.
Yeah. Gosh, y'all are so fun. Y'all are so amazing. Is there anything that you want to close with that you feel like is really, really important as far as both sides? And if not, just encourage what we should do moving forward, especially in this market?
I think I would just say at the end of the day, just to go back and remind people, I think the market is stable now, right? Like Steve and I keep using this word stability. I think I want to encourage people to take their insurance very, very serious, right?
Yeah.
When you think about covering your assets and covering your risk, that's not a thing that's simple or easy. And you got people like Hagan Risk that can walk you through every step in understanding that. Be educated in that, right? Take it very seriously. And I would say know each home for what it is and don't make assumptions, right? Nothing's more heartbreaking than walking somebody all the way through a process, getting all the way to the end, and something is a big surprise, like a flood insurance, and they can't get that home. We hate to see people have broken hearts over. But once you know that information up front, you can make intelligent decisions. So I think that would be my encouragement. Just make intelligent decisions.
That's good.
And make them quickly.
Well, as AI and whatever this Reels thing you're talking about is really taking over, I'm still old school.
Yeah.
I still like to meet with people. So one thing, along with making sure your insurance is online, taking it serious, reading it. I can't tell you until I've had a few customers that came to me and said, I don't know what my insurance is. I was like, I don't either. So I went through and read through to see what my policies actually cover. But same with the mortgage, meaning you can go online, you can do an app, you can go through a computer system that's based in Chicago that's going to help you through the process, or you can there's still a lot of great lenders here, local, that will walk you through it, especially a first-time home buyer. If you want the concierge service, I got to throw a plug in for my crew in Lake Jackson.
Of course, yes, of course you do.
Shane, Jeanette, and my two Cheryls, I have two there. These guys are really, really good and would love to help you out. And again, I'm available there to just want to come shoot the breeze with me. Then come sit
Yeah.
down and visit with me. I'm
Yeah.
actually there still every day.
Yeah, no, so you guys have been so good. I really appreciate your time and thank you for shining some light on some of these scary topics. And with that, I hope you enjoy the rest of your day.